Hello and welcome to the American Dream Connection. Now, we were going to call it the Real Estate Beat.
Oh yes,
With
Real
Mike
Estate
Meena.
Beat. We got the beat.
You got the beat. So it's going to be the Real Estate Beat with Mike Meena
And Amy Atkins.
and Amy Atkins. I'm Amy Atkins. He's Mike Meena.
Today.
And we welcome you to the show. Update on what's
We
going
got
on.
the beat.
Hey, you know what I find interesting?
Real Estate Beat. You like that? Oh, I could be a go-go.
Oh, you could go. Go where? Are we starting over?
No.
Okay, we're still going to go. Hey, you know what I find interesting?
What do you find interesting?
And I'm interested in
What are you interested in?
the fact that there's something called an interest-only loan. And a lot of people have that confused with a negative amortization loan. They think it's the same thing, but it's not. So let's talk a little bit about interest-only, who would benefit from it, and how it works.
Well, interest only is just what it sounds like. Interest only. Yeah, and it's interesting to have interest-only loans again, and we've had these for a little bit of a time, but really not a necessary product when rates are at 3.5%. But when rates are where they are right now, it's not a bad product to have because it saves people, say on an $800,000 loan, it might save you $700 a month, which allows your purchasing power to go up probably another $100,000 over what you would get with just your standard, regular conventional loan. The negative to it today is you're going to need 20% down, and you're going to need, depending on the investor, anywhere from 12 to 36 months of reserves. So with that being said, doesn't fit everybody, but it fits that person that really wants to squeeze out a little bit more, that has some money set aside either in a 401k or an IRA or a stock account or something that they really don't want to touch or access for the purchase of this new property.
So this is not a 30-year fix. What's the rate and kind of the rate and term on this?
Usually you're going 5 or 7 or 10 years fixed, and then it goes adjustable after that period. There's no balloon payment. It's a great product. I mean, a lot of our investors are doing it now, and it seems like it's going to become more and more widespread as time goes on.
Who would be a good candidate for this loan?
Anybody with 20% down with reserves. I mean, I think anybody who wants to save a few bucks or wants to squeeze out a little extra on that house, I think it's a great product for that. And you can pay extra. It's just giving you that option to have the lower payment on those rough months. I mean, someone in sales, someone who has an up and down income, that would be great.
Great. So maybe somebody in the entertainment industry that kind of works. That does
Yeah, that's great.
Because we have a lot. I know we have a lot of those.
I could have been in the entertainment industry.
Yes,
but
you could have. Believe me, I've seen it.
Yes.
So reserves. I know we talk about reserves. That's sort of lender talk.
Yeah.
And a lot of people that may be watching or that they may share with, they don't really know what a reserve is. So
Yeah.
can you kind of touch on that?
Well, reserve is, sometimes they call those people out, but like an army reservist or something, like you get that. You know how that works?
I do, but I think
Yeah.
we're going more towards the financial part.
Oh, the financial
Yeah.
part. Okay, yeah. So the financial reserves is the fact that if you need 12 months reserves and your payment is principal, interest, taxes, and insurance is, say, $6,000 a month, you need 12 months reserves. 6 times 12, last I checked, was 72. So you need $72,000 in your reserves. Now, if that's all in a stock account, great. But if you're looking at 401k and IRA and things like that, then they're going to use 75% of that. So if you had it all in an IRA, we would want about 100 grand, and then you use 75% of that. That gives us 75. Now you're good. You're golden.
Well, that's good to know.
Yeah.
And they're not staying in this forever. So would you say this is a loan that would be sort of refi down the road, don't stay in it for long term?
Well, I think anytime you have the opportunity to refinance at a lower rate, you would do that. And I think this is one of those opportunities that you're going to have. Hey, I'm going to get into this property. I'm going to take the rates that are in front of us today because property values are fairly low in comparison, and they're probably going to advance again next year when rates start to come down. So I'm going to jump into this loan, and when rates come down, I'm going to go ahead and refinance to that lower rate and probably keep my payment the same and then be able to pay that $700 or $800 a month in principal.
So this is really a good tool to be able to get the home you want, but not have as high a payment as you would
Correct.
where rates are at right
Yes.
now. Okay. So how would they go about seeing if they qualify?
Well, they call me. I mean, just pick up the darn phone, text me, email me, whatever you want to do. I mean, all of our stuff's on the bottom of the Real Estate Beat, isn't it?
Yeah, it's on the show, so they're going to be able to see it.
Yes, they can see it at the bottom. So,
Yeah.
I mean, if you guys just watch it till the end, then you'll see my information.
But it's good information. And again, these are loans, we get creative when things go up a little bit, but it's not a negative amortization loan. It is an interest-only loan.
Correct.
So even though you're not paying down the principal at the moment, you're paying the interest. It's still a good way to be able to get into that home.
I hope this was interesting.
I think it's very interesting about
Okay.
interest-only loans.
Yeah.
Yeah, it's
Well,
good.
I just don't want it to be interesting only to you.
I don't think it is.
Okay.
Yeah, I don't think it is. Yeah. So thank you for watching. Again, we are now the Real Estate Beat with Mike
We
Meena.
got the beat.